Good morning. Good morning. How we doing? I got the music pumped up a little bit. I don't know how loud it is on your end, but we're doing great. We're going to have a great day today. We're going to get into going over the analysis here in a second. Just getting a couple things set up. We'll be rocking and rolling. Okay, folks? Good morning, Ted. All right. How we doing this morning, folks? I got it, turn you guys down a little, turn the audio, the music down a little bit here. Hopefully you guys having a great day today. I'm excited, back at it, back trading, back hanging out. It's going to be a good day. Because today is the day the Lord has made. I will rejoice and be glad in it. It's going to be a good one. We had a fantastic last 2 weeks. We're going to do well today. And let's start by doing a higher time frame analysis. We'll get here going. We got about 5 minutes. We'll do a higher time frame analysis, okay? We're going to get into that. And then later into the video, into the live stream, we'll be going over we'll be reading order flow, answering questions, and hanging out with you guys. My goal of these live streams is to help you become a profitable trader, to help see you become successful, to be able to step away from that 9 to 5 and do your own thing. Okay, do the things you're passionate about, that you want to spend your time doing. That's really what this is all about. So I believe that this is one of the best ways for financial freedom. I do. Okay, so before we do that, we have to put a few markings on our charts. And those markings are, we got to put our midnight open, we got to do our new week opening gap. We got to mark those things out. So we're going to drop down to the 1 minute time frame and we're going to find those. And we are looking for the opening price from Sunday, which is going to be right around here. Okay, right here. We got it. Let's mark these out. Here it is. I always like to put the actual date on there. So 9/16. I just put today's date on a Monday, so I know what I'm looking at. That's just helpful. And then let's scroll to the midnight open for tonight, and let's mark that. Man, it's been, wow, look at that. Look how small that volume is. Right there. All right, midnight opens way up there. midnight open. Okay, so we got our new day opening gap right here. That's the 16th. We have our midnight open here, and now we'll wait for the 9:30 opening price, and that will be our last. No, that will be one of our last. We have one more. We need to put up Friday's highs and Friday's lows. So we'll zoom out to Friday, or to the daily chart, and we have Friday right there. So we will mark our Friday's highs, and then we will mark our Friday's lows. Now, I know that there are tools out there that will do this automatically for you. I don't. I do this manually because I want to see the chart. I don't want to just take it for granted. I need to look at it. And as I see this, I have a daily fair value gap right here. So I can tell you right now, I want this daily fair value gap to hit, and then I want to target the highs. Now, will we hit the highs today? I don't know. We got a lot of news this week. So it could be any time this week that this hits, but when we hit this previous day low, that's where I'm going to be looking for some type of long setup. That's kind of what I'm looking at, okay? A reaction off of this. Now, do we get up to this previous day high? I don't know. That's uncertain at this point. I'll say most days, we do not see what this candle did, sweeping the lows and the highs. We will usually sweep one or the other. Deborah, good morning, good morning, good morning. My weekend was great. Had a bunch of football games for my boys. One of my sons had a bunch of he had 2 flag football games, and then I coached my other son in tackle football, and he did way better. They still lost the game. We had a bunch of kids on the offensive line that were sick, so they had to play both ways. It was a tough day. All right, so this is really all that I need, this daily time frame, to give me my context. I want the previous day low to be hit, and if anything, I'll target the new week opening gap as my high, as my target. So we're going to get out of that. Let's drop down to the 1 minute here, and let's look at our 5 minute. Yeah, everything's really tight here. All right, there's opening bell. I don't like this. I don't like this at all. That just looks nasty. What I mean by that, really lack of structure. What did I say I wanted to see? I want to see the new day opening, or the daily. I want to see this, tag this daily fair value gap. We should hit that. There's no doubt. No doubt we hit that. $9.30 opening price from Friday is right here. We're running into that. Let's see if we find some resistance on this new day opening gap on the 13th. If we're going to find resistance here, and then drop aggressively into that. Not a bad idea. See if we find, here's a breaker that just hit. Oh man, we'll get this out here in a second here. what's up with this? Okay. All right, I took a short on my personal account on that. That's why I didn't change the music there for a second. It wasn't my model. It was momentum. It was the rejection. There was several different factors there that for why I took that. Here, hang on. Let me show you guys what I was looking at. All right, so this candle right here. This was strictly a momentum play, and not one I'm ever going to call out on a stream. I'll never do that because it is very subjective. There's less rules involved. It's mostly feeling. And the idea that I came across was we have this low that I wanted to hit. We came lower aggressively, and then when this candle wicks higher, right here, we hit this breaker, and then we reject. Now, we messed around here a little bit, and this is where I got in short, was right here. Was when we rejected this and showed some retracement, and then I sold at this low right here. I sold when we hit that. So I got about 23 handles on that trade. And I could have held it for more, as you can obviously see. But next thing that we're going to do is we're going to mark out our 9:30 opening price, because this is going to be very important for us to keep an eye on, as well as our very first fair value gap, which is right here. Okay. Oh my gosh, I'm done with music. I don't know why. I thought I made sure I restricted. Let's see, moods. Let's see. Let's do. Midpoint. So this is our very first fair value gap. We're going to watch this, see if we come back and touch this, use this as either support or resistance, okay, if we want to use this to move higher. The other thing that we need to mark on here is our regular trading hours, our opening range gap. So our opening range gap is sitting right here. We're going to mark that. All right. I pretty much have everything marked that I want to have marked, okay? And I like this draw on liquidity. This is going to be my draw that I'm really looking for. I played the momentum lower. I'm done. Sit out. Wait for a nice, good setup. We grab the previous day low. Check. Let's see if we have any other lower side targets here on the 5-minute. Looks like we have one on the 15-minute that looks pretty nice. We're in a 15-minute fair value gap sitting right here. Beautifully overlapped with the consequent encroachment of the daily. So that both on the 15-minute and the daily overlap beautifully as far as the consequent encroachment. That I like a lot. Okay. So outside of that level, I really don't think there's any other downside target unless we're bearish on the day. I'm personally not bearish. We have we have this nice, smooth. This is just too nice to want to run. And then we have relatively equal highs sitting up here. Close to the previous day high. I don't think we're going to get up to the previous day high unless we're really, really bullish. And I'm uncertain what that would look like. So this is kind of the idea that I have. Let's drop down to the 30-second and see what this looks like. We have an inversion right here, but there's not much structure here. So we don't want to take the first stab longer. We want to wait for more structure. So what I would like to see is something like this, and then we start moving higher. Okay, that could be done very quickly, or it could drag out and give us some time to actually do that. Okay. Morning, DDT. Deborah, you took the short. Okay, hopefully you were green on that. I mean, it was really nice. It looked really nice. Now let's see here. I wanted to do this. Don't go. This can't go right now. I don't want it to go right now. Really, I'm watching this 1 minute fair value gap. If you're like, man, look at all this stuff that's on his chart. It's a lot of stuff on the chart because I'm zoomed out. When we zoom in, it takes pretty much everything away. And really the only stuff that I really care about on here. And I'm half tempted to get rid of the 13th on this new day opening gap. Not because it's a Friday. Deborah, it sounds like you've been doing really well. I'm really happy for the progress you're making. So, you guys like my shirt? I don't know if it's backwards or not. This is something my boys gave me. Right there. Got a picture of my boys there. Thank you. We're all drinking. I'm having a beer. My boys are having some lemonade. Oops. We do have some news today. Let me pull that up here real quick. I know we had some type of news here. Okay, so news-wise, here's what we're looking at. We have Monday, we have at 8:30, we had the Empire State Manufacturing Index. That's pretty much it. So we're free and clear to begin trading. As you can tell, I took a trade, so it really didn't affect us that much. It was a nice trade to the downside. See if we get another setup. I like this opening range gap. I like the new week opening gap sitting up here as well. Midnight open is here. Would like to see this find support right here. We've already done that once. Still has room to fall. Let's see. Possibly. I'm less interested in that. Really, if we want to see higher prices, we do not want to see this daily fair value get filled. ICT talks about this all the time. When you have a fair value gap, he says he prefers the bottom third to stay open. So this is the bottom quarter to stay open, especially if you want to see higher bullish price action. And I'm bullish, okay? Bullish to the daily or to this level here, which is those giant equal highs that we have way up there. So this is a signature in price. What you're seeing right here is a signature in price. You know what's crazy is it also left this 15-minute not fully filled. This is what we want to see. We don't want to see complete filled areas. When it leaves this open, it says, hey, I'm going to go higher. Now, we're still looking for that opportunity on where are we going to go higher. And there's really nothing. I really want this, but we have this small fair value gap sitting right here. And it's not, I don't like the way it looks. It's fine. It's fine. I'm not gonna play an inversion off of this because of that. But we need more. I need more structure for an opportunity to go long. I don't think we just do a V right here. It just doesn't make sense to do a V. So I'd like to see it come back down and find support here. Sometime this week, probably, Ezekiel. Probably when ICT mentions it in his live stream. He checks something. I always forget. He looks at the volume between the contracts, and I don't remember which one, what site he goes to. So there's a site he views that shows the volume on the contracts for September and December. And so when what he says is when December here goes higher than September, then that's when he switches over. So he needs the volume to be that. I don't know when that is, and I don't remember the site. So if any of you guys remember or know, I mentioned this before my in another stream. I don't keep track of when it was. I thought we were supposed to do it like 3 weeks ago. I just don't keep track of it. I know I probably should. There's just too many other people that, you know, hey, here's, make sure you switch contracts, like my post. You know, I don't. You know, one thing I've noticed with day trading is the balance of the excitement of a super easy trade and the how boring it is to sit and wait for setups at the same time. We had this phenomenal move lower, got to play it, had a great, got 25 handles, and then now we could sit for 30 45 minutes, an hour, 2 hours to wait for our next setup. It's just, there's so many different feelings and emotions that you can get through day trading. All right, there's our close above this inversion fair value gap. I mentioned I was not going to take it. Because of this small one. This is our daily. What I would rather see is us come up here, find support. I want to use this fair value gap as support. So when I see that we maybe close above this new day opening gap and then find support here and then go higher off of an inversion to the upside, meaning maybe something like this, and then there being a fair value gap in there somewhere like that. That's kind of what I'd be interested in. That would give me the confidence. I'm just not going to go long on this fair value gap. It just doesn't make sense. But despite that, this is a significant fair value gap because it's the first fair value gap of the New York session. This one does not count because this is the 9:30 opening candle. This is 9:29. We don't count that one. This could be a trade idea right here. If you play inversions off of this, it's 950. That wouldn't have been a bad idea. With the expectation we're moving higher, but I'm not taking it. I'm thinking of doing another challenge, guys. Tell me your thoughts in the chat. I'm thinking of doing a 10 handle challenge. So we've done in the past a 3 trade challenge, keeping your trades limited to just 3 trades for the purpose of preventing yourself from overtrading, revenge trading, and keeping your losses at a minimum. And coming to the realization that you can make a lot of money with only a trade or 2. I took 1 trade and I made almost $1,000 on my personal account. Not even a copied account. I'm waiting on my copied account for the setup here. You guys will see that. Man, come on. Give me a retracement. I want the retracement. If we get into here, here's what I expect. I'm saying it just since we're on stream. If we get into here, into this opening range gap, I think we'll be very aggressive running this. I don't think we'll waste much time. So I'm wanting to get in down here to target this, at least to the mean threshold or the consequent encroachment or the middle of the opening range gap. That would be my first target, which is right above these swing highs. The next would be this swing high sitting right here. And then the last would be the new week opening gap, which is probably my preferred target. What I will do, I'd consider this. I really didn't want to, but I'll probably consider a close above this to target these swing highs and move my stop to break even. Let's see what happens with price here. So the idea of the 10 handle challenge is to teach people that you don't need the big home run trades. You need 10 handles, and you can drop your 9 to 5 if you can be consistent with 10 handles. You could get rid of your 9 to 5 by simply focusing on 10 handles. Yeah, there are some traders out there that boast, oh, look at this giant trade, 200 handles, 100 handles. And hey, I want those too. I mean, I got one 100-point move last week and a 160-point move the week before. I love those. But for somebody that's starting out, that's maybe doesn't have the history yet to be able to make those types of trades, 10 handles is all you need. And it's so easy to get 10 handles. It's so easy to get 10. I remember when I was trying to get 5 handles. And then all of a sudden I remember I'm like, man, I'm getting 10 handles. I just realized it. Like, my trades were 10 handles. I was going for 5, and then I was going for 10. Then I was going for 15. Now I go for anywhere from 10 to 20, 25 handles is really my bread and butter. And then I'll okay, this is it. I want to wait for the close, but I'm going to take it. It's too much volume, too much aggression. I'm getting ready to put my stop to break even. As soon as we hit that high, stops at break even. Let's see if we keep pushing. We might stop a little bit more. It's going to stop me out right here, probably. I want it to be aggressive. Come on, don't stop me out. 930 opening price is right there. Let's see if we hold it right at the 930 and we start pushing. Come on. Okay, stop me up. We tried. We tried, folks. We tried. It was just the candle was too large to have to wait for that close. So I was hoping that I could get in here and be able to capitalize on that. Son of a gun. Don't take away this trade from me. Come on, folks. It's finding support at the 930 price. This is why we have 930 marked on here. This is the power of 3. This is manipulation. Now we're looking for the expansion. Does the expansion go to the all-time to the daily high? Probably not. We still got 4 minutes. I want to see what the range is till 10 o'clock. Honestly, I would love a retracement. I prefer a retracement. If it just runs without us, it's going to take away the... Son of a gun. If the 15-minute closes here in 3 minutes above 930, very bullish. Let's go to the 5-minute. Oh, see, there it goes. This is what I was expecting it to do, guys. I told you it was going to be aggressive. At least to that 15, at least to the halfway point of this gap. It looks like December has slightly more. Okay. Then what I'll probably do is stick on what I got going so far, and then I'll probably switch over tomorrow, if that's the case. Let's see how it respects 930. Way to go, Charles. Hey, you can make 10 handles on September or on December. Now, I wonder if the how it's playing out is due to the contracts, you know. Yeah, I'm not on December yet, Mark. I am not on December. I am still on September. I'll probably switch tomorrow. All right, that's 3 times we've found support here. Look at the bodies. They're all closing above 930. If we get a large wick lower and close above, I'll take a long on momentum. But I doubt we'll get that. I would rather see, I personally want to see a retracement. I want to see us move down to this fair value gap here. We are respecting, look, we're respecting the small 1 minute fair value gap sitting right there. Man, if I didn't get stopped out, that'd have been a nice 20 handle run play right there. All right, so we closed just below 930. Still, I would call that supporting 930 support right there. Yeah, MH, drop the link on the page that you use for rollover. I don't really pay attention to it. I just wait till I see all this stuff online. Body's respecting this 1 minute. I'm not taking it because we already grabbed liquidity here. Is there a 30-second inversion? No. Five minute, we just dropped into a 5 minute fair value gap. That's nice. Right there. Wicked into the 5 minute fair value gap. Boom. If you're liking the commentary so far, guys, do me a solid. Hit the like button for me. I'd really, really appreciate it. Want to help more people get out of their 9 to 5. You know what I'm saying? Okay, let's see what happens here. 5 minute. What do we get on the 15? Okay, 15 minute. Look at that. Look at that. Look at that. Interesting. 15 minute did not close above the 930 price. So I was looking at this to become an order block. This is not an order block right now. We have to wait another 13 minutes for this to close to see if this 930 15-minute candle becomes an order block for prices to move higher. So it makes sense why we're consolidating here. Does that make sense? I wanted to see this close above. We didn't. Got it. So now we just see what price wants to do. It could consolidate here for a minute. It could run and just go. But that's kind of where I wanted to see what was going to happen with that 15-minute candle. Oops. But I am absolutely bullish. If it gives me a breaker lower, I will not take it. Meaning, if it does something like this right now, because this is a breaker. If it does something like this, I would not take it. I want to go that direction. Hey, MH, were you able to drop that? The page for the rollover or Dunsworth? Can you drop the link in here in the chat on where you do your where you look for the volume for the contracts? I'm sure you could probably Google it. I'm streaming right now since we've been chatting about that a little bit. I wanted to get into this opening fair value gap right here. No, I don't. Interesting. Why don't you do it without the .com? Do it without the .com. Put it as just a regular text. I wonder if maybe I have a setting that prevents people from dropping links. That would make sense, to be honest. All right, look at that candle there. This 5 minute closes above here, it'd make an order block right here. And that would be in line with this order block sitting right here on a 5 minute perspective. Let's see where we close in 16 seconds. Because that means we could get this could be a propulsion block making this next candle very aggressive. Okay. So the next 5 minutes could be pretty aggressive here is what I'm saying. I still don't see an entry for me though. There could have been one on this 30-second. Yeah, it's right here. Let's see if we get an opportunity. I think I'm going to take this. Oh, it didn't take my order. It didn't take my order. I clicked buy right here, and it didn't fill me. I was going to run for this high. Maybe it was good that it didn't. This 30-second right here, what I'm looking at, why I took that was this 30-second right here. We aggressively closed above it, so we should be running right. We should run pretty aggressively here. Let's see if it wants to get down back down here. Oops. But my guess is we start pushing. That's what I would want to see. If I'm in the trade, I would want to see it start pushing. Yeah, I think that's what we're going to do. Shoot. I should have looked at the 30-second. I would have taken an entry right here at the 930 price. That would have been a beautiful entry. Oh, look at that. Look at that, guys. I don't know what I was thinking. Come on, look at that sweep right here. Look at that sweep. And I would have been able to take that trade from this close to this high. That's 20 handles. There's my trade. I missed it. Missed it. Dang it. Okay, MH got it. I'll check it out. Maybe I'll look it up. I don't want to look it up now. I missed my. Maybe I should look it up and cool down a little bit. All right, CMA Group website. Click on the quote page for NQ. Is this the page, folks? Am I on the right? Screen share. Is this it? Here? Slightly more on the volume, 121 to 112, September, December. Let me drop that in here, copy. I'll drop that in the chat. Look at that gap. Look at that gap right there, folks. So when we have a gap like this, you have to play it like that. You can't play this as a fair value gap. You got to include this gap, but we will absolutely draw up into here. That's too big. So if we can get a sweep of liquidity here, or we close above this box, I'll take a long, targeting that high, or maybe even more. We'll see how aggressive it is. This is probably a B setup. It's not an A plus setup. We're not sweeping any liquidity. We are bouncing off of a 5-minute and the new day opening gap from the 13th on Friday. But I would prefer to see a sweep of liquidity before we get aggressive. But it looks like it's probably going to run and do it without us. And because we're so close to the high, I will wait for the close. If it runs without me, it runs without me. This is a very finesse type trade. You close here, we're probably running these highs, and so you move your stop almost immediately to break even. And you can do that pretty seamlessly. The way you can do that is you can put your buy order in right here. So let's just say we want to put our buy order. We're going to just drag this down here, and then we're going to drag our stop right down here. So this is, we sit these here. So if price starts moving, all we have to do is drag it up and drop it. Okay? And then our stop is already set, and we can just move that really fast as well. So that's a way that we can actually be ready for this. Now, if we start getting aggressive, I'm just going to cancel these so I don't get filled here, because my goal is not to go buy down here, which it's not a bad buy. I mean, if we wick here and then move higher, that'd be actually a great entry. The thing you have to remember if you do this concept, so if you leave these limit orders on here to move, you cannot forget about them. I've made too many mistakes forgetting about these types of things. Because you'll see on TradingView, usually these will be linked together. If I exit out of this one, it will remove the other one. But if you don't have that bar that connects them, that means this stop loss will stay on here as a sell order. Right? Yeah, as a sell order. If I drop it right here, it'll still put me in. All right, so I'm in right there. And now my stop is here, getting ready to move to break even. Okay, stops at break even. Gonna set a limit order here. I would like halfway of this opening range gap. If I don't get tagged out, all right, it tapped me out. Very hard, very hard, very hard to do when you want to move your stop loss to break even. Because this probably will run without me, but I just didn't want to take the risk because of how high we are and how close we were to the high. That's the last thing I want to do, is it sweep this high and then run completely against me. I'm not going to mess around with that. So I'll be happy to miss this trade with a break-even balance. It won't bother me. So I could have got 5 handles out of that, but I'm not pulling profit at 5 handles. I'm typically looking for more than that, 10 to 20 to 30. I mean, I'll be happy. I will be elated by having my stop at break even and being stopped out, especially if this drops. Oh, it'll make me feel so good. This is actually a trade right here. A minus. I don't like that we didn't sweep this high, but we did grab some liquidity here, so we need to be really aggressive. As in, like, in the last 13 seconds, we close below it aggressively. So if we just kind of consolidate here, then nah. But I'm not going to take a short. All right, so the 15-minute did close about 3 minutes ago. We now put in an order block. We have the 9:30 opening price. Actually would be a tag of the 15-minute fair value gap. So hitting this level actually would not be a bad mark. Hey, folks, give me a second. I'll be right back. Okay. We're back and ready to rock. My wife just showed up. She was out running some errands. Wanted to say hi. Okay, so there's the 9:30 opening price. Do you see that? I said 9:30 opening price is also the 15-minute breaker. 15-minute break, or not breaker. Actually, is a breaker as well, but it's a 15-minute. So that is a legit trade idea right there. Now, I'm not necessarily a fan of it because we have this low resistance liquidity right here, but an inversion off of it wouldn't be bad. So we have that volume imbalance right there, so you have to include that. I don't like that. I would rather... You see it? Do you see this? Do you see this consolidation here? This is where people get tripped up and get losses in all of this crap. Okay? The only opportunity I saw was right here. On the 30-second, when we wicked really low, giving us displacement, a fake out and displacement, we had a 30-second entry right here that we could have targeted this high. And even with this big wick lower, you usually see an explosive move higher. We didn't even get that. We grabbed this swing high and not this one. So this is all consolidation right here. I'm not going to... You want to stay out of this. It'll be better for your pocketbook by staying out. And I actually want to see what this 30-second looks like right now. No. Nope. Sweep of the lows. See that? Sweep of the lows. Let's see if we get an aggressive move right here. I don't want it to run completely. 30 seconds already completely filled. It's rebalanced. Actually, that 30-second with the 9:30 price looked nice. Interesting. All right, 1 minute. This looks somewhat better. If I'm honest, if I'm really honest, I would have preferred this fair value gap to not be up here, but to be like down here. This is where I would want to see it happen. So then I have all of this to run up through towards these highs. I'm not as big of a fan of the volume imbalance and fair value gap to be so high. Yes, there's a small one right here, but I don't like it as much. Hey, Adzi. Doing fantastic. We did a play right out, momentum play right off open. I didn't call it out on screen just because it's not a model. It's just a momentum gut play. So we got in short on this green candle and got about 25 handles on my personal account. This is not bad. This is not bad. I don't like it because we don't have a swing high. Our swing high is after a fair value gap, volume imbalance, and then there's our swing high. So it makes it a B plus setup because we did grab liquidity down here, which is great, but I'm still not liking it. We're not really making any we're not really making any types of moves here. No, I missed my 30-second entry right here. I was on the 1 minute and I wasn't paying attention to the 30-second. I marked it out when we were about right here and then I hit enter. I tried to buy, but it didn't fill me. I don't know why. But I should have got long right here. That would have been beautiful. Been 20 handle move right there. At this point, I do want to see lower prices. How much lower? Down to here. I'm not changing my bias, folks. I'm not changing it. I'm not a flip-flopper. Actually, it's probably good to be a flip-flopper. But not so easily anymore. You know. Oh, it's going up. Oh, it's going down. Oh, it's going up. Oh, it's going down. No. I'm looking at the 930 opening price as my point, is my swing point. Let's call it a swing point, okay? The origination point for our lower move to a move higher. And that is in light of the concept of power of 3 or AMD. So A, accumulation, manipulation, and then when we move higher, distribution. Now, what people struggle with all the time is, well, what do I do with this movement right here? What do I do with all of this? If this really was the manipulation, shouldn't this be the distribution, and shouldn't we hit all the way up here? No. It is about time and price, okay? Time was 935 down here, okay? It could have been this, but it wasn't, right? So because we haven't moved higher and we haven't hit this new week opening gap, this opening range gap is still unfilled. We haven't hit the halfway point. It doesn't need to. But if price wants to do this back and forth, this up and down, come lower, come higher, come lower, what we're looking for is time. So look at the black box on the bottom right here. We want to see some type of significant key level hit around our macro time between, let's say, 10:45 and 11. Okay, somewhere around here. Then we see price do something like this within our macro and then be aggressive to the highs within the macro. Now, the macro could be 11 a.m. macro. It could be the noon macro. It could be the PM macro. We don't know, but we need to see time align with price and our models show up in that. We didn't get our models show up in here. We really didn't. We had an opportunity here maybe, but I'm not taking that. I just wasn't ready to take that. So it looked as if it was ready to fly, but then consolidate. Now we're dropping. So let's just see if we find support at this lower fair value gap on the 1 minute. Okay, so we have this 1 minute. This is where I expect price to find support. Then what do we do and what time is it? What do we do and what time is it? That's really what we're looking at and what we're trying to determine here. You know what I could do? I think this is enough space for the 5 minute. I really don't use that much of it. Because if I could also throw in the 15 minute in here for you guys, or the hourly, it'd be kind of nice. All right, so there's the, let's just do that for now. This is the 15 minute. Yeah, hopefully it's helpful, but you see how right before this big drop, look what this did. We swept these highs. This is a micro manipulation for a move, right? It's not the higher time frame, but this is lower time frame. Sweep the highs, run lower, come back up, hit the breaker. High, low, higher, high, break lower, come back up into the breaker and drop. Like I said, I'm not looking to go short, so I'm okay with this running without me. I do not feel bad at all. I would rather conserve my capital and not make a mistake. We're letting time pass. It's 10:30. 15 minutes we're going to wait. More than likely, nothing significant is going to happen in those 15 minutes. So we're just watching price, reading price. We're reading order flow. We're not taking trades off the order flow. Something clicked in my trading when I was able to transition from reading price action and not taking a trade. Those do not equal each other. Reading order flow, reading and knowing where price is going to go does not equal taking a trade. They're separate from each other. Reading order flow helps us understand where price is going, gives us confidence that we know where price is going. So when our model shows up, we do that same thing within our model. Okay, you just don't take trades off of nothing and just being able to read price, take an entry. Now, what you can do is when you become very good at reading order flow, you can create additional models. Okay, my additional model was this right here. Okay. Normally, I would not take, my model is not to take a wick at a breaker without some time. We had one candle display slower and we wicked higher immediately. This is a momentum breaker move with a draw on liquidity below, right? Because I've read order flow so much, I was comfortable seeing this large displacement candle with our previous day low right here, that when it wicked up at the breaker, high, low, higher, high, swept these highs right here with this candle, I was comfortable saying, okay, momentum is in my favor. Yes, it's 9:30, so we could run against us, but I think I got this fairly cheap. I got this pretty high in price that if we start running against it, I'll sell the trade as soon as this is closed. But if we keep this fair value gap, I'm golden. I'll take it. And we immediately closed here and dropped. That is a model that I've acquired because I've gotten really good at reading order flow. But you just don't take trades because you can read order flow. You don't take trades because you need to be also at the right time. To me, this is not the right time. And this is the mistake I've made so many times is I'll see something, oh, let's take the trade. I would rather wait for more structure. I'd rather wait for a better time. I would rather wait for all these things because while I may still be correct, I may not have the correct time. Meaning we might turn right here. But do you know what else we could do? Is this. And I could still be right. But before we go, we do this and then run. Do you see what I mean? This is what price typically does. It will consolidate, wick lower, then run the other direction. So I would rather wait for an obvious manipulation that I know is obvious and then take a trade off of that. Now, off of this, one thing I would be interested in that stands out to me is this right here. Taking that to right there. Those relatively equal highs with a relatively cheap trade, 5-handle stop loss. This would be a nice trade if we can find support, continued support in this fair value gap right here. But we would need to see some pretty aggressive candles. Okay, because we're already pretty steep. You see how steep this candle is, or these series of these down close candles. We really don't always go directly back up right away. We did here, and I said that's not very common. But what happened right afterwards? We consolidated and went back down. So basically, it's rebalance. It's not rebalancing this area, but it's basically going back and forth. Look at that candle, folks. Look at that. All right. So we filled this 15-minute fair value gap. Here we're still in the daily fair value gap, and we haven't completely closed it yet. Let's see if we find this 829 new day opening gap finds support here. Do we have anything else? What time is this price? This is 12:30. We have a swing low sitting right here. I don't think that's significant. I think if we're going to run this low down here. I like this one here. I like these new day opening gaps. If we choose to run below this, I'm interested in these new day opening gaps right here. They're from the 12th. Okay? Just a few days ago. But personally, I would rather it not completely fill this gap, Deborah. Personally. Because ICT is 100% correct. And I've seen it many times. Is if this fills, it does not mean that we won't move the other direction, but it can mean we may not be as aggressive. So another way we could put it is if we look at a higher time frame, 4 hour, if we look at the 4 hour chart, what we could see, sorry, this is me doing some projections and doing some back testing on projections. The projections are looking pretty good. We'll talk about that in a second. What this could mean is if we fill this daily volume imbalance, is price could do this a little bit and then run. Mean it's not as aggressive. It's more, it has a higher probability that price is going to stay in this general area. You look at this candle here. We wick down into it and we move. Let's look at something else. We wick into this candle here. Right here. We leave it open and we move. We did fill this one. I agree with you on, I'll make that point. We did completely fill this one, but the body's also respected the consequent encroachment of that 4 hour. So there's multiple things that you have to look at and consider. And if it's not going to give us the first option that we are looking at, the next option is, all right, where does the daily fair value gap close? Or where does the daily candle close on a daily basis, right? So if we got here, does this daily candle close above the consequent encroachment? Does it wick lower and close above? Does it close above the fair value gap altogether? Does it close green? Those will all tell us future days on how aggressive it may be. But when we are looking at a lower time frame context, we're looking at the more immediate price action. When we're looking at the 1 minute time frame and we're looking at, does it fill it right now? I'm thinking, does it wick lower? Does it come into it one time and then aggressive immediately? But if we're going to play around in it, it's telling me that it's not ready to be aggressive right away on the lower time frames. I've been doing projections. They've been pretty fun. Something that I'm back testing to just to find out where I could potentially target things. So we have our opening price. All right, there's our high and our low. I'm going to go higher. Let's go from here to here. All right. So what we're looking at here, all right, I took off the new day opening gaps because they're not as significant. But I left on the new week opening gaps. And here's what we're looking at. Is this price range right here is the low to high before 10 o'clock. ICT talks about taking the low to high. You can also do the low body to the high body. And you can see where these levels land. I have 0.95 and 1 standard deviation. I have 0.95 and 1 standard deviation. The reason for that is I'm testing to see if we within this range, if we get a high and low or a significant high and low in the range. And I'm noticing that many times it will fall in this. It may continue later, but many times I'm seeing it's landing in here somewhere. So if we go from the bodies, this is right below the previous day high. I like that. If we do from the wick low to the wick high, we're overlapping with a new week opening gap right above the previous day high. Right above these highs. Now on the opposite end, we have if we're running lower, this could be potentially the low that we're seeing right at the low from Thursday. There's our low for Thursday. So I like where that lands. So we're going to see, I'm going to keep these on the chart to see if price actually wants to run to one of these levels. That's kind of what I'd be targeting as far as a potential range for the day. I'll take this long here probably. We swept the lows right here. We were pretty aggressive, moving the other direction. Quickly, that is. So let's see what happens here. I like these equal highs and right with a fair value gap right above it. So that's what I'd be looking for this push to run into. That would give us about 20 handles. This is a big, and this is fairly small stop loss. So I think I noted this earlier. This is a 5-6 handle stop loss, something like that. And if we're gonna find resistance here, and then this candle or a future candle closes above these two down close candles, that gives us an order block. An order block inside of overlapping with this order block or this down close candle right here, creating a propulsion block. If this is a propulsion block, that means when this candle closes, we could see some aggression. If we don't see some aggression, that means it's not a propulsion block. But that's what you want to see as far as the signature and price. So if you take a long off of this and we don't get that aggression fairly within the next 1 or 2 candles, it may be an indication to you that you should cut the trade idea because it's not doing what we expected it to do. $15-minute just opened, so we're at 10:45. So far we have 2 break-even trades today. 3. We're 1 for 1 with 2 break-even trades. The break-even trades don't take away from our 3-trade rule. So I have opportunities for to try to get in for something else. But to be honest, on both times, well, for the most part, for both times, the break-even stop loss has protected us from losses. Both of them have. So this is why I'm okay taking a break-even trade, because I feel happy when it runs the other way and I don't lose any money. I haven't gone back to the silver bullet since I lost lots of money trying to use it. And I didn't fully understand it. Now I have a better concept of it. This would be one, and it would be in light of a market maker sell model if that's the case, but we already grabbed this low. So I just don't use it. I'm happy with all the other stuff. You can pick your model and stick with it, man. You see it all the time, but how many times have you seen it and not work? Right? Why not this one? Which you could have taken, but then this one to the downside. There was just so many other factors that I didn't understand that I need to take in relation to that, and ICT did a very poor job on giving us context for the silver bullet. He simply just said, find your draw on liquidity. That's the truth, but there's so many other factors to that. And it's in context of the market maker sell model and market maker buy models. So if you identify a market maker buy model or sell model, the silver bullet will work out a majority of the time. And here it is right here. And frankly, I wasn't looking for this. There it is. Now, I probably still wouldn't have taken it because I would have seen this as my origination point for the market maker sell model. That's how I would have viewed this. So I would have been less likely to take it because we swept liquidity. That's just, I will never take a short like this when we grab liquidity. If I was going to take a trade, it needed to be up here. I shouldn't say ever because I made stupid decisions in the past. This actually is not bad. A close below there. Now, it's not an A plus setup. It's a B plus setup. Why? Because we already grabbed liquidity and this is just newly created. We don't have to run this low. We don't have to run this low. So I'm not taking it. But it's there, and if we do see lower prices, if you are bearish, this is a trade to take. But I'm not bearish, so I'm not taking it. If you're bearish, this is a setup no brainer, because we see this showing up here. We're seeing an inversion here, but I mean, you can see it's already gonna blow up right here, unless we just get it just drops right now. You got 23 seconds. But I'm honestly looking at this to play the other direction. Oh, that's nice too. This 30-second right here. Couple different options here. AMH, I'm glad, my friend. Good. Praise God. I'm glad it's helpful. Now, this has turned from a A+ to an A- because we have a swing high right here. What I think, I don't know what I want to do. I'd rather see this and then that because of this swing high. I would want to see this act as a breaker. I would want to see that act as a breaker. I think that's what I would want to do. Just because if we hit the swing high, we could drop. When we grab liquidity, what happens? What does price do? Price will grab liquidity and then either run to an inefficiency or run to more liquidity. So if I'm using this as an inefficiency that's being violated, that means I'm looking at it as it wants to run to liquidity. Well, this is the first point of liquidity here. I want this one to be, but it could run this liquidity and then turn the other direction. So this turns this inversion fair value gap from an A+ to now an A- maybe. Now, if this gives me a relatively equal highs, I will like this more if it comes back down here and then moves the other direction again. Now, if we have this, and then also we have an order block here, a close above this order block would give me confidence for a move higher now too. Also coming into this fair value gap and finding support in this fair value gap to move higher, again, something else that I'd be looking for. That gives me more confidence as price action continues to play out. I'm taking off. I just don't like all this stuff on my charts. Second opportunity on this market maker sell model right here. We marked this before. It hit it to the tick here on that candle. And then it closed on this candle. The body closed on it perfectly. The wicked up on it perfectly. Still not interested in it. We got a breaker right here that we wicked into. Low, high, lower, low on the 32nd. Came back, hit it. We have a tiny inversion. I'm not a fan of this, how small this inversion is. If that was a bigger inversion, fair value gap on the 32nd, I would 100% take this. But it's too small. And it's probably going to run. I mean, it looks nice right here. It looks really nice right here. I might. It's feeling good. I think I'm going to take a long here. This is risk. I'm going to get ready to move my stop to break even as soon as we run these highs. And if we don't, let me drop down to the 32nd because I think I'm premature on this. Here's our 32nd. I'm going to go right below this volume imbalance right here. All right, so it ran against me. That was a poor decision, Tyler. That's you sitting and have waited too long. That was a poor decision, folks. That was a poor decision. I knew it right when I hit the buy button too. I was just hoping that we would at least run this high, which was really close, and I would have just dropped my break even, my stop to break even. But it didn't. All right, there's one loss. I'm only willing to take one more. If it's not a win on the next trade, I'm done. That was me forcing something, folks. Take that as a lesson on what not to do. And I think what I'm going to do because of that is I'm going to drop down to micros. That was I'm going to drop down to micros. I don't want to. That was a 15 handle loss, not big, but I don't want to double that. If I have a second loss, I'd rather be conservative and look to get a 20 handle move to get back what I lost, because that's the type of trade that I would want to have anyway, is a 20 handle win. So let me get this set up here for you guys. Working risk management, folks. Risk management. The answer, Michael, the answer is you're not correctly reading order flow. You do not trade fair value gaps, you trade order flow. And you use your fair value gaps as entries based on the order flow you're seeing. And it just takes time. It takes time. So do not give up. Do not quit. Stick around. Let's continue to practice reading price action and let's learn. Okay? Also, time of day is important. Right now, it's 10 o'clock, and I was willing to take that. I am considering a short here. If we were going, right when I say it, it starts to move aggressively. Let's see what happens here. Are we on the 30-second? Let's go down the 30-second here. Why do I have this box here? What is this box? That's Thursday's low. All right, there's a close right there. I kind of want to go short here, but I'm not going to. Feel like I'll be trying to revenge trade. We already swept this low right here, so it makes it less probable. We'll see how it reacts with the consequent encroachment of this fair value gap. Let's see if it aggressively runs the other direction or not. And I don't know if my micros are screen set up here. I'm going to try to set this up. I don't know why I did that. That's not it. Sorry, guys. I might not be able to drag it on there. All right, so I like the way this is looking here. Let's see if it holds. I want to see where this closes. Basing on 10 o'clock. Let's see if we drop here. I'm looking for 80 ticks here. Let's see if we can be aggressive. I'm going to move my stop to break even. I want this low to be ran, and I would like us to push from these lows, not change directions. I'm going to sell 3 here. Oh. It's not going to let me. Did it? I don't know what happened there. What just happened? Got out for break even on that. I tried to sell I did 5 micros. I tried to sell 3 right here. I don't know why it didn't work for me. So I basically got like $30. Break even basically. I was wanting to see if we were going to run this slow. That was the idea. Especially with these 2 candles right here sitting below. That's where I took that idea from. Now, when we stopped, if this was going to run, this should have really ran, and it didn't. So when it stopped down here, that's when I wanted to sell 3 contracts. End up selling it like up here. Three break evens in 1 loss. It might be good just to call it a day, folks. Might be a better idea to call it a day. If we're going to have 3 break evens, must not be a primo day to trade. You know what I might do? Let's go. What is the December contract? Is it H? What is the December contract? I don't know what the number is. Or letter. What's the letter? Z? Alright, so we got MNQZ 2024. That's would be the... The other thing is if I jump over to that right now, I'm going to lose all of my levels. I would lose all my levels. Yeah, I'll do it tomorrow. Let's see what happens in the next few minutes. If we don't see anything obvious, I'll probably call it a day. Now I'm watching this inversion fair value gap. I'm seeing where the body's closed in relation to this. Look at where the body's closed on this wick. Upper half of this wick. I'm liking this aggression. We will wait for this level. That level needs to be ran. We could put a... I'm going to get rid of those. I'm going to get rid of this. Five-minute. Closed. I think I like this 15-minute. Yeah, this looks aggressive. We got 3 minutes till the 15-minute candle closes. This will be a change in state of delivery right here. Wicked these two highs. We left that one. This is an aggressive. This is now we could get retracement. Let's see the 5 minutes way down here. You got to be careful on wanting to go long on something like this because you could get a large retracement. I like this breaker that overlaps with this. Got 2 minutes left. It could just go right without me. Thinking of taking this long on this inversion, moving my stop to break even quickly. Targeting these equal highs here. Have my stop already set real tight. Stopped out. I'll be done. All right, folks, I'm going to take that as a day as a reason to end my trading. That was those were micros, so not a big loss, but I don't want to mess around with that. I wanted to see that push really quickly, and it probably will still give it to me. I just was unwilling to take a big loss because I had a first loss already. So we'll be done with that for today, guys. I'm going to call it a day. I will be back on potentially tomorrow. We'll see. Oh, we traded live? What a stud. What a stud. Well, this is a place to do it right here. And this is the move. Yeah, this would be the place to do it. Yeah, this could just explode right here higher. This is that's what I would want to see. I want to see if we find, what I'm waiting for here, guys, is I want to see if this inversion fair value gap does find support here and runs to these highs. That's really what I wanted to see, if it actually does. But I guess you guys can watch that on your own. I'm gonna call it a day here, folks. Thanks for being here. We'll be back tomorrow or Wednesday. I'll put a comment in the community side of YouTube if there's any changes. So we'll see you then. Take care.